All right, everybody, Jeremy here. Welcome out to the Market Bias Report for Sunday, March 31st for the trading week ahead. As our new tradition, let's start off reviewing the previous trading week. So as you can tell, I've been trading a ton of Bitcoin and Ethereum futures contracts recently. That has been kind of my bread and butter. And there was some fairly significant volatility in the market over the last trading week, all within a very tight range. So if we actually go out and look at this on the daily chart before we look at the trading journal itself, you can see basically this whole last week we were going back and forth in a range, and because of the style of trading I do, I was trying to play bounces and resistance, support bounces and resistance tests within this. And every once in a while, you can get caught in a fairly significant turn of events. And if I put this out to the 1 hour and zoom out here just a little bit, this right here, this big green wick that was a power candle that I entered into, reversed and ended up coming back down into support and tapping me out. And this right here is what I am going to be talking about here in just a second when I refer to a liquidity sweep. You can see the huge volume came in out of nowhere and had what was a really good trigger candle breaking above the previous consolidation zone here that just could not hold. And I ended up getting trapped in a trade on this that basically wiped out my gains from this huge move here. So just to give you a visual of what I am showing you here, I started the week with a $16,000 gain on my first trade, and then ended up giving that almost back between an Ethereum trade here, another quick in and out trade on Bitcoin, and then the liquidity sweep here. Basically took me back down to basically neutral for the week, which I was a little bit bummed out about, but that is part of trading. You know, you have to take the wins, you have to take the losses. The losses are a cost of doing business. And in this trade specifically, looking at this trade that ended up being the worst by far trade that I've taken this year, you can see my notes got triggered into a beautiful bullish Harami candle on 30-minute chart at opening bell, spike in volume, confirmation, green arrows, all my signals a go. MACD and RSI looked good to 30-minute, 1 hour, and 4 hour charts. Daily candle looked good too. Then within 30 minutes, bears had completely wiped out those gains and dropped price hard to my stop loss, tapping me out. There was nothing I could do on this trade other than just take it or not. And I would have taken this trade 10 out of 10 times with the setup that I had when I took it. But there was just kind of a liquidity sweep that knocked me out. And for those that don't know what a liquidity sweep is, it is basically where big institutions that have a lot of money to throw around will temporarily put in an order to push prices higher. They will trigger people in. They got us just above our trigger point right here, just enough to tap traders in, and then they will reverse, take a bigger short position to then liquidate everybody that just took that trigger, so that instead of buying here before they did that liquidity pump, now they can buy down here and buy the position that they actually wanted to go long. So super, super frustrating when that happens. Doesn't happen very often, but every once in a while, some kind of a big institution will come in and basically purposefully fake traders out and then liquidate them and then buy in at the price that they wanted to, which was down here underneath 69,000. So anyways, that is a liquidity sweep. That is basically what happened here. And despite giving back those gains that I started with to start the week here, that 16,000, I was able to make back a decent amount. Overall, if we sum these trades up going from the beginning of the week through until close on Thursday, because we were closed on Friday for Good Friday for the holiday, if I sum all those up, we ended the week up $8,590. So still not too shabby. Could have just stopped trading, honestly, after the $16,000 gain, but that is the beast that we play with when we are in the markets. And I saw trades that I wanted to take. I took them and ended up giving back a significant portion of that 16,000, but still had a banner week at $8,590. If we go out to our chart here and just take a look, I'm going to move my video a little bit. So this is our year-to-date profit and loss. January started here, now closing out March up. We are now up a total of 110,544 for the year in 3 months of trading. And if we take this out to look at the quarterly analysis, every 2-week period, I log how much I've gained or lost. So this was actually the second worst 2-week period that I've had, second only to this $544 gain that I had, because I had several big losses that I ended up having to mitigate that first couple of weeks of the year. But now we've obviously gotten back on track, still ended up this 2-week period up significantly, wiping out the previous week's loss that I reported to you guys last week. So with that, we're not going to save that. And we're going to jump right into our charts. So looking at the S&P 500, we are trying to break out on the futures basically right now. I'm going to keep saying what I've said this entire run. I don't particularly like chasing indexes when they are at the highs after huge, huge runs. In this run, we are up about 30%. Over the last 6 months or so. I don't personally like chasing those other than really quick targeted trades. So on this breakout, depending on if it sticks the landing and closes above that level today, I might be interested in taking some kind of a day trade or really quick 1-2 day trade to start the week. But other than that, instead of playing the indexes, I am personally more interested in looking for individual stocks within sectors that look good to go. But you have to call this what it is. You know, we are obviously still in a very consistent uptrend. So at this point, you have to assume that prices are going to continue to go up. If we go out to the NASDAQ, same thing, although we have not poked our head above our ultimate wick resistance right there, about 18,700. Have a little bit more consolidation in the NASDAQ going on. If we do break out above that level, you should assume prices are going to keep going from there. If we go out to the Russell, we have gotten our breakout, and let's jam this down to a weekly time frame. You can see here we had this big resistance zone where all of these wicks were coming down into that 2100 level over and over again. That level got tested. Then that support level got broken, turned into resistance, got tested on this side multiple times, couldn't hold. And then we've just been chopping back and forth in this range for what seems like forever. Had one more test here, couldn't hold it, but this was a change in characteristic, right? Instead of bouncing back and forth from the top and bottom of this big range between these two red lines, instead we came up, broke temporarily, came down and set a new higher pivot low, establishing a higher resistance, or excuse me, support zone. That is really, really telling to the market when you are able to move this big run here, come down, and now this change in characteristics told us that we should expect some kind of a breakout on this next go. So I've actually played a couple times in here, and you can see that I actually have orders in here for an order that I already have placed. I jumped into it on Thursday of last week, and now I'm riding this higher. So I am targeting 2200 as a real easy target, and probably up to 2250 to 2300. So that's kind of where I am expecting this to go. Whether it does it on a straight shot or not, probably not, but we'll see. We should expect a little bit of chop on our way, but I am expecting that 2250 to 2300 for targeting on the Russell, and this looks good. Tossing it back out to daily chart, and I don't do it very often, but let's just check in on the Dow Jones. Again, very similar story to NASDAQ and S&P. We're basically knocking on the door of a consolidation breakout. Should expect higher prices to come. If we go out to crude light is opening up at the top of range right here to consolidation. I am actually in this trade, as you can see, and I am targeting up to probably 86 or so. If we really get some momentum going on it, like we got back in later part of last fall, then I could see us pushing up to 90. Probably won't be a straight shot. We will have some kind of consolidation along the way. I'm targeting 86, and then we'll adjust stops accordingly if I think we still have room to run. So really like the trade in crude light. If we go out to Bitcoin, Bitcoin here has done absolutely nothing wrong. I basically called the top here, said we needed a retracement, got the retracement. We have now found support and been consolidating just above the 20 and 9 moving averages. And now we are trying to break out of this little wick high here that's coming in at 72,495. We're currently at 72,220, so really, really close to breaking out on that. If we do get above that, we should be targeting up to previous all-time high at 77,415, and then honestly, probably up to the 77,500 range. So that is kind of my short-term target, getting back up to all-time high and then back up to the 77,500 range, breaking out of all-time highs. Going out to gold. Gold is on a momentous tear. Got our breakout here. We had a fake out last week, came back down, retested, or excuse me, that was, I guess, week before last. Retested, did confirm higher, and now is just on a tear up. And if we toss this out to a longer time frame chart, let's actually go to a monthly chart. You can see this really nice kind of cup and handle pattern here. Big resistance zone around 2100 that we have finally broken out of with momentum, and we should expect follow through on this. Probably up to somewhere around 2400 would be my price target for gold, but it's very, very bullish right now. So any gold stocks, ETFs, anything like that are good to go. GDX is the miners ETF. And just to put this in a longer time frame so you can see, it has actually been kind of coming down and is still trapped in this diagonal resistance line just below its 200 period moving average. If this gets back above its 200 moving average, currently at 32.24, let's just call it 32.25, this should have room to catch up against gold. If we do GLD, which is the actual gold ETF, not just the miners, you can see it is running right now. So there is no reason that the miners who actually extract gold from the ground should not be profiting hand over fist right now. So I'm really interested in GDX for potential catch-up trade and seeing some momentum follow through to the upside on gold. If we go out to silver, this is just a mess. Let me clear all that stuff off. You can see I'm actually in this trade from last week, and I am expecting a break above this. Took a trigger actually down here on this little wick low on an intraday trigger, and then decided to stick with it over the weekend and actually look to turn it into a swing trade. So love the look of silver. I am expecting it to actually pop and move higher here as well. Going out to, let's see, let's just take a real quick peek at palladium, actually. Palladium is setting up here, I think, to potentially make another move higher. Had a little head and shoulders bottoming pattern here. You can see kind of the shoulder on the left side here, down to the head, back up, defining the right shoulder right here, and then coming back up. And then the break above that line was the continuation, or excuse me, the finalization, completion of that head and shoulders pattern. Got the break higher, came up to roughly the 200 period moving average, pulled back down, and now, get this, we are pulling back and finding support on what was previous resistance. The price was having a hard time breaking through this price level right around $1,000. It did break through. Now it is confirming that price level around $1,000 as support instead of overhead resistance. That is very, very important. So trigger on this, a few days ago, we had a high of 1027.5. This one was 1035. So a trigger above 1030 and 50 cents would be the trigger in, and then targeting back up probably to 1100 or so on the top side. So nice, about 70 point potential move on that. And then putting our stop down below, probably the candle low here, which came in at 993. So nice 2-to-1 risk on that. Really like that potential trade. Actually, I'm going to be adding that to my watch list here for the week. Finally, let's go out to UUP. It has broken out of a consolidation zone here. I don't particularly like the look out of this. I do like the fact that it's still under the 200 period moving average. If we toss this out to a weekly chart, that 200 period moving average will actually line up really, really closely to the 50 period moving average. As long as we stay below that, I'm not too concerned about the impact that the rising dollar will have on the equities market. But if this gets going and gets some momentum to the upside again, that could spell trouble for both commodities and the equities market. So keep a close eye on the US dollar this week. Make sure that you are paying attention to that in case that does start to spike out of control. It could impact negatively the equities market. Finally, let's just go out, check our heat map real quick. This is a 1 week performance, looking to see what gained, what lost. Obviously, oil and energy, like I called out on the commodities, doing really, really well. We've seen healthcare kind of peak back up. And interesting that some of the tech areas that had been on fire, especially semiconductors and software and NVIDIA, Avgo, things like that, have all cooled off and are in a bit of a retracement. I don't think that's going to last forever. They are all driven by AI, and that theme is just too strong right now. But they had moved so hard and so fast, they really needed a breather. So this is actually healthy development for the market to see these stocks pull back a little bit. And once they find a floor and confirm to the upside again, there's going to be an opportunity in these areas. So I am personally keeping a lot of these stocks on my watch lists and just waiting for a new entry point once we get a signal to go ahead. Finally, wrapping up, let's just go out to our Forex factory and look at the economic calendar ahead. Monday, ISM manufacturing data. Important, but not super important. I'm not expecting this to move the market one way or the other. JOLTS job openings, kind of same thing. Non-farm roll, non-farm employment change, services PMI data, and then Fed Chair Powell will speak again. Normally, I pay attention to every time that he speaks. I think since we had last week him speaking and actually giving the rate decision, which they paused at again, I'm not expecting him saying anything wildly different than we heard last week, so I don't particularly care to spend a lot of time tracking what he says this week, but it is of note that he will be speaking on Wednesday morning. Then on Thursday, we'll have unemployment claims, and on Friday, we will have the hourly earnings and non-farm roll employment change again. So anyways, I hope that helps, guys. As always, let me know if you have any questions. I am here to help. If you have not, subscribe. I would absolutely love it. Hit that like button for me. I would really, really appreciate it. And as always, let me know if you have any questions in the comments.